Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we will take a look again on the euro currency. On the first glance on euro currency, we do not have any big shifts, so market mostly stands flat within the recent 3 weeks, but that's only on the first glance. Actually, guys, we recommend you to read our weekly research, especially the fundamental part of this research. And last week we have provided our brief look at the perspective of the third quarter on the 2015. So there are two major moments we see right now on the markets. First of all is the rate hiking will be probably the just dot action. So we do not anticipate any cycle of the rate hiking. And in today's comments that we have posted in the weekly research, the other analysts think in the same manner. And the second, the recent news from the China on the export and import, the situation in the banking sphere on the China just confirms our expectation that the global economy becomes slower. It means that the low rates will remain on the markets, and it also means that we hardly will see any inflation anytime soon. That's why this really put the fragile foundation, not reliable foundation, on the any rate hike in the United States. And it seems that investors right now start to understand this and start to think in the same manner mostly. And despite that we see only shy changes on the market, under the curtain of these shy changes could stay the really significant shifts. Particularly speaking, it seems, at least we think that is possible, that right now investors start to think on beyond the rate hike, whether it will happen in September or in October, it doesn't matter. But now investors already start to think what will happen after that. Because they, based on the recent non-farm payrolls, they mostly think that and treat the rate hike, the first rate hike in the United States, as the done thing. So this, they treat it as already has happened factor. And this recent upside reversal that is accompanied by the good non-farm payrolls data, it really could mean something. It could be not just occasional action. And the reasons for that could be those that we just have talked about. So, if you will take a look at the weekly chart, you will see that the recent week has brought us another bullish grabber on the weekly chart. So right now we have the 3 grabbers in a row on the weekly chart. Also, guys, market has remained on the previous week above the weekly pivot support one, and market stands above the monthly pivot support one. Although the whole last week market shows the signs of weakness, as we said, that has started since last Friday, when the market wasn't able to utilize, as we said, ECI positive data for the euro, and has continued lower. We thought, well, probably it has done, so hardly market will turn to the upside, especially we will get the positive payrolls, and probably market will continue to move down. But this hasn't happened. As you can see, that market not just stands above the major fib support, above these lows, and keeps well at this triple A pattern, so thrusting up, ABCD retracement. It also behaved not quite naturally on the recent non-farm payrolls release. And that really could mean something. For us, in the short-term perspective, it just means that it's too early to forget about grabbers. to erase the opportunity, to abandon the opportunity of the upward action. So this brings new breath in the setup of the weekly bullish grabbers that we have right now. But the technique of the trading of these grabbers will mostly remain the same. So guys, since we have the bullish patterns right now, you just need to decide whether you would like to trade this setup or not. If you would like to trade it, the following part of the video will be dedicated to this moment. If you do not want to do this, or you have the bearish view, in this case you just need to wait the one thing. You just need to wait when the market will take it out of these lows. It's 108 lows. If market will take it out, it will erase as the guard is 222 buy. It will erase all the bullish grabbers that we have on the weekly chart. It will shift all trends to the bearish side. Weekly trend, monthly already is on the bearish side. Monthly is already bearish, and daily time frame trend also will be bearish. In this case, it will just open the road to the downside action. But until this grabber is valid, we will talk about it. And since this valuable setup right now, especially in the light of the recent events that we see right now on the response of the markets on the data that we've got. So that reminds the classical proverb. So sell on the rumors, buy on the effects. And here probably the thing that we see right now. So market has anticipated the rate hike when it chances on this, when the probability of this becomes really high, market turns to the opposite direction and treat this event as mostly done thing. So on the daily time frame chart, you can see the trend has shifted bullish. Since grabbers have the minimum targets above this top, it's 1450 target, market still as holds above this low, keeps chance possible for this butterfly. So 127 will stand around 116 area. So that's why this low also significant. It's another pattern that could be formed. You could ask me why you have drawn the bullish butterfly, but because you also could draw the bearish butterfly. For example, right here, so this could be right wing, it could be left wing, we should show the downward action. Well guys, this may be true. This maybe could happen, but I based my analysis on the information that we have, on the patterns that we have on the high time frame charts. And on the high time frame chart, situation mostly bullish for the EUR, and the reaction on the non-farm payrolls release is also bullish for the EUR. That's why, since we have the bullish patterns in place, we will base our analysis on them first. As soon as they will fail, we will start to think other signs, other patterns that could be shown here. But for that, we need first get the pure clarification, pure signs of the failure of the bullish patterns. And we do not have them yet. So that's why we are looking at the market from the bullish point of view. Especially because the daily and weekly trends also bullish. So here we could get such sort of action. Market right now is not at ever bought and ever sold. So hardly it should show some very deep retracement. Our invalidation point for our analysis is still the same, below this 108 lows. Now let's take a look at the 4-hour time frame chart. Here, at the first glance, again, we do not see big shifts. So what really has happened? Nothing. But in reality, there are some important moments for us. First of all, take a look. The market has broken the tendency of lower highs and lower lows. Although new highs haven't been created yet, the market has stopped the tendency of lower lows, because here we see already higher lows. The market has turned some triangle consolidation on the 4-hour time frame chart. Also, market has formed this bullish grabber on the 4-hour time frame chart that suggests further upward action. This potentially, if especially we will take into consideration the patterns that we have on the high time frame charts, on the butterfly on the daily, the grabbers on the weekly, these could bring a lot of really important issues. First of all, take a look, we could get minor butterfly here. This one. Second, we could get just simple breakout of this triangle. So it's also important. So that's why the first thing that we will be watching for is breakout for this trend line. As soon as this will happen, that will confirm our bullish view. This very important sign will be. It's not very significant target, but the sign of the breakout to the upside will be very important. Since market has tested weekly pivot support 1 on the last week, Here we will not expect too deep retracement right back down, and since it just has bounced up, jumped up out from the support, we also do not expect the reversal and returning back to this support. This will be the sign of a weakness. We expect to see some retracement here and an upward continuation. That's what we would like to see on Monday. If our expectation will be correct, so take a look at the hourly chart. Here this thrusting action as a response on the farm payrolls, and I think that we should watch for this level. It's 109.30 because this is fib support, and also guys, this is weekly pivot point. So that probably, since market has moved lower and hit the weekly pivot support one last week, and since it's already has started upward action from the support, it should not show deep retracement here. I think that this level will be the preferable, but if it will show the 50% or 618, that will be acceptable. But we do not want to see return right back down to lows and erasing this thrusting action. That will be the warning factor, warning sign. We would not want to see it. We would like to get this retracement and upward continuation. That's what we will be watching for in the beginning of the next week on Monday particular. Later on Monday we will be watching for breakout of this trend line if we will get it, of course. And that will let us to continue with this upward scenario. If we will not get this, or if market will return it back down, break this triangle to the downside, taking out with these lows, in this case probably we will turn to the bearish setup.